Hey everyone, welcome to the June monthly market insights. A lot to talk about today. The markets have been kind of pretty volatile, but things have been trending in the right direction. So we're going to give you an update, kind of some of how the major market indices are doing so far this year. Talk about some of the things that have happened recently. Again, kind of the trending topic for really what it feels like the last 18 months has been what's going on with inflation, what's going on with the Federal Reserve interest rates, and how is that impacting the market. So we'll kind of cover those things today, and that should wrap it up. So looking at just some of the indexes so far, or say indices so far for the year, through the beginning of today, June 10th, the S&P 500 for the year is up about 15%. So it lost about 19% in 2022. And so far, we're up about 15%. So things are kind of getting closer to normal or almost our last market high. Our last market high of the S&P 500, which makes up essentially the Fortune 500 companies of America, the last market high was December 31st of 2021. So it's been about 18 months, and we're slowly kind of climbing our way out of that last low in 2022. And so things are getting better here in 2023. One of the main reasons is because another major index, the NASDAQ index, is actually up about 31.5%. So that kind of makes up a lot of our tech-based companies, a lot of our growth companies. That is doing really, really well this year. Now, it also got hurt a lot more in 2022, but so far for the year, the NASDAQ has done much better than the S&P 500. So that tends to be some of the positions that are pulling up the S&P 500. And we can prove that because of the top 5 largest companies in the S&P, you have companies like Meta and Google and NVIDIA and Apple. Those are a lot of those tech-based companies that are in the NASDAQ. Some of those are up over 100% for the year. And so the NASDAQ is up 31.5%. It tends to be pulling up the S&P 500. And we know that because the Dow Jones, which is something a lot of people will quote, which makes up about 30 companies that are kind of a broad index. I like to think it's not a great example of how the U.S. economy is doing, but it will kind of show us in this example, it's up about 1.8% for the year. So the tech companies tend to be pulling up the rest of the market right now. The S&P 500 is doing really well, but most of that's done by the tech-based companies. So we're starting to see maybe some of the cyclical companies, some of the consumables, some of the other industrial companies starting to progress, but not having near as much success as the tech companies so far here in 2023. We kind of relate that to some of the artificial intelligence, a lot of the people kind of guessing what that will do to the economy, what that will do to companies. And so that tends to be something that we think is kind of pulling some of those things along. Whether or not it comes to fruition or not, we'll kind of find out moving forward. But that's kind of a snapshot through the first half of the year, through the first 6 months, how some of the indexes are doing, here in 2023. Okay, but really what continues to be the trend, and we got some news last week, that first week of July, then we get some big news this Wednesday, right? So at the beginning of this month, the Fed came out with some meeting minutes, and those meeting minutes just kind of showed that they're not quite sure what they want to do with interest rate hikes, but they kind of anticipate them raising them in the future. And so what we saw in June was the Fed said they're going to skip an interest rate hike. They're not going to raise it. So the reason they decided to skip it was because they just couldn't come to agreement on what they should be. All 18 members of the committee weren't sure if they should raise them or not. So they said, you know what, if we can't agree, let's just skip this one. So we get the next interest rate announcement at the end of July. Last week, we saw some of the meeting minutes, and what we saw were 16 of the committee members think that we need to be raising rates. Kind of 4 were kind of unsure of what was going to go on. 2 said we think we're just fine. So there's still a little bit of kind of disagreement, but most of them agreed that interest rates won't be dropping in 2023. Okay, so they kind of said we need to at least keep them where they're at through 2023. And then how many hikes and how great the hike should be, there was still some disagreement. So people thought maybe 1, maybe 2 more hikes throughout the rest of the year. Again, there were just kind of differing opinions amongst the 18 committee members of the Fed about what would be best course of action. Now, some of the things that are leading to and kind of had a rough week last week in the markets, and that's because we're seeing unemployment. The unemployment number came out last week, and it actually dropped from 3.7 down to 3.6%. So we're seeing unemployment is not going up. And so as long as unemployment doesn't go up, the Fed feels like they can continue to raise interest rates because they haven't caused enough pain on the economy. So their goal is to get inflation down to 2%. It got as high as 9.1% in June of 2022. It's kind of had a big decrease last month, went from 4.9 down to 4% when we got the number in June. And then this Wednesday at 8:30 a.m., June 12th, we're going to get the next inflation number. So we need that number to continue to creep down. If it goes lower than 4, if it drops below 3s, right? Again, that may lead the Fed to say, maybe we don't need to do another interest rate hike, or maybe just one small one. Maybe not doing 0.25% every time, right? So that's kind of the numbers they're looking at. They don't see unemployment going up, right? Tends to be pretty stable, right? The number has really kind of been between 3.4 and 3.7 over the last 18 months. It hasn't really gone up drastically. So they haven't inflicted enough pain by raising interest rates where people are firing people. So they think, hey, if we want to get the the inflation rate from 4% to 2%, let's get it while we can. Let's raise rates while we can so that we can get inflation down to 2%. So we're excited to see what number comes out this Wednesday with inflation. We want that number to continue to trend down. It's led to a really positive market so far here in 2023. A lot of that's being brought up by the NASDAQ and some of the tech-based companies. At the end of the month, we'll kind of get some more insight into what the Fed wants to do. But we thought kind of the meeting minutes that came out where we don't expect them to lower interest rates in 2023, 1 to 2 more hikes, maybe not as drastic as 0.25% every time. Those are some pretty eye-opening notes that we read in the Fed meeting minutes. So that's kind of what's been going on so far for the first half of 2023. Some of the data that we're looking at last week, what happened in the markets last week, what we're looking at coming up for this week, and really throughout the rest of the month as we continue to get good reports on earnings and unemployment numbers. All those things tend to be pretty positive. Hopefully, we can continue this momentum throughout the rest of 2023, and the Fed can continue to provide some clarity on the interest rate hikes and the inflation environment, because the markets just don't like uncertainty. As long as they know something, they can price it in. So we're really excited for the back half here of 2023 and a big week coming up this week. So if anything comes up, if you have any questions with your portfolio, don't hesitate to reach out. Hopefully that will provide some insight into what's going on here in the economy in 2023. Thanks, and have a great rest of your July.